Welcome to the Fintech One-on-One podcast. This is Peter Renton, co-founder of Fintech Nexus and now the CEO of the fintech consulting company Renton & Co. I've been doing this show since 2013, which makes this the longest running one-on-one interview show in all of fintech. Thank you so much for joining me on this journey. Now let's get on with the show. Today on the show, I'm delighted to welcome JB Orecchia. He is the CEO of SavvyMoney. Now, SavvyMoney, really interesting company, been around for over a decade. They're focused on bringing credit score solutions and analytics for banks and credit unions, as well as fintechs. Now, the fact is, consumers these days are more aware of their credit score than ever before. We talk about that. And banks and credit unions or any financial institution doesn't necessarily want their customer to go to a different website or app to monitor this. With SavvyMoney, they can do all this inside the app of the bank or credit union. And they provide all kinds of services that really help make that really useful for the consumer as well as the financial institution. We get into all of those different things in quite some depth. We also talk about their new Get My Rate product and why that is so significant and much more. It was a fascinating discussion. Hope you enjoy the show. Welcome to the podcast, JB.
Hey, Peter. Great to see you.
Good to see you. Thanks for coming on. Let's get started by giving the listeners some background. I know you've been doing SavvyMoney for a while.
13 years, Peter.
13 years. That's a long time.
That's a lot in dog years. Feels like that long.
Right. A lifetime. Yes. But why don't you just tell us, hit on some of the background before SavvyMoney, some of the high points of your career to date.
Yeah. So I've been in, I was looking at it today. I've been in financial services now. It'll be 36 years.
Wow.
On August 8th. Yeah. My first day of work was 8/8 of 88.
Wow.
So started in lending at Household Finance, moved into the credit card division there. So 10 years in lending. And then in 98, left to be one of the founding team at freecreditscore.com and freecreditreport.com, which was later acquired by Experian. Stayed with Experian 6 years. Did a brief stint with Disney, where I was the VP of marketing at Disney.com, and also produced a movie during that time, an indie comedy with Patrick Warburton and a number of other stars. So that was a little side project. And then in 2011, started SavvyMoney, and 13 years now, here we are today.
Right. Yes. So you've been around, I said, a lot of consumer finance, financial services for a long time. Let's kind of dig into SavvyMoney and how do you explain what you guys do exactly?
Yeah, so I think it's important to think about kind of the history of what I've done in my career and how that applies to SavvyMoney. So 10 years in lending, and a lot of that time was spent, one, understanding the lending process, doing underwriting, lending to consumers, actually in the early days, even counseling them on how to better their finances. Fast forward to freecreditscore.com and Free Credit Report, we were the first to deliver credit reports online. Mm-hmm. And so we pioneered that space, was super successful, grew that to $1 billion business. In fact, it's one of Experian's largest businesses today. And when I decided to build SavvyMoney, it was really an answer to other fintechs that were in the market with a direct-to-consumer credit score product. And my thought process was, geez, if you're a bank or credit union, do you really want your consumers going to a third-party site and seeing advertising and then being lured away, right? So when we built SavvyMoney, it was really very intentional. It was a B2B solution to integrate credit score, financial wellness, financial advice inside the digital banking app, right, where the consumer is going to be, as well as making it relevant to the consumer. So we don't just provide the credit score to the consumer. We also provide financial advice where they can pre-qualify for loan offers and see their savings. And so it's very personalized, relevant content. And for the financial institution, it's really driving engagement, driving people back to their site, driving obviously improvement, which is super important to credit unions, right? Financial wellness, but they're also in the business of driving loans and deposits and other things that help the financial well-being for the consumer. So it's really a win-win for the financial institution to have these products built in. It drives a tremendous amount of engagement. And yeah, it's been super successful. We're up to 1,350 financial institutions. We integrate into 40 digital platforms. So pretty much the entire digital banking space integrates SavvyMoney. And so it's been an exciting run.
Interesting. So yeah, Credit Karma launched before you guys, and that might have been what you were referring to, where you started to see traction. I've been a Credit Karma member or whatever since 2010. It seems to me, and I'd love to get your perspective on this, but it seems to me that people are more aware of their credit score than ever before. Even in your journey with SavvyMoney the last 13 years, I mean, if you go back a decade, it seems to me that people certainly are much more aware of what their credit score is and how to improve it. Is that what you've been seeing?
Yeah, I think it actually even goes back farther than that, Peter. So it goes back about more like 20 years when our advertising at freecreditreport.com, I don't know if you remember the commercials, the band, and really that was very intentional to reach a younger generation, because if you just went, credit's important and you got to manage your finances, that whole generation would have turned it off, right? And so those commercials were kitschy for a reason, to really gain awareness as to, hey, I want to manage my credit. If I want to drive a nice car and have a good job and have a good financial situation. And I think that really triggered a big following of a younger generation as it relates to managing their credit, right? It caught their attention and then had them delve in. That generation is very focused on getting their score to over 800, right? Like it's almost become an obsession of managing your score and understanding all those data points and why it is what it is. And what we've done a really good job of at SavvyMoney is engaging consumer. You understand all the parts of their credit score. You can update your credit report every day. All those factors are updated on a regular basis. And we are very intentional to give them action plans and goal setting in order to improve their credit score so they can keep track of it and they can see that progress or simulate what they need to do in order to improve it. On top of that, why else do you manage your credit but to ultimately save money, right? So your credit is really driving what you pay for interest rates. And so if I can see in my user experience, hey, if I refinance this car loan, or if I consolidate this debt, or I do this balance transfer, or I did a home equity loan and consolidated debt, really having all those calculations built into your tool. The other piece that was very interesting, TransUnion did an analysis of 100 million consumers over 5 years of credit monitoring services all in the marketplace. And the average increase over the course of a year was about 15 points. Well, SavvyMoney consumers increased 31 points. And I think it's a testament to the stickiness, the relevant content, what you measure, you will manage in our product that really drives users back in. The other thing is the loan offers, I think, really kind of are a testament to, oh, well, now I know if I improve my score, I'm going to save money on loans. And now I'm even more motivated to improve my score to get there.
Right. When you're talking with banks and credit unions, obviously if they're coming on board with SavvyMoney, I imagine they also see the value in having their customers have access to these tools. Maybe you could explain sort of what's the sweet spot? I mean, who is the typical SavvyMoney customer? Are we talking about small community banks and credit unions, or does it run the gamut?
Oh, I think it runs the gamut. I think every financial institution, from banks to credit unions to fintechs, we work with a number of fintechs as well. It runs the gamut as it relates to credit score bands as well. So you'd think, oh, is it just for people with bad credit? No, 50% of the consumers that actually engage in the product have the highest credit score bands. And so depending on what your situation is, we're going to give you different advice and different content and different tools based on your current situation.
So then what's the bank or credit union getting out of this? I mean, what's like they're paying you money. What is their return? What are they trying to achieve here?
Great question. So the analysis the number of our FIs have done is that their consumers are 3 times as profitable, higher retention, higher engagement, higher loan volume. So we have a robust analytics platform that actually tracks where consumers are borrowing, if they're borrowing from them or if they're borrowing from other lenders, so they can see their market share. They can see their consumers actually improving their credit, which is super important. They can do retargeting campaigns based on the products that the consumers are engaging with within the application. So we have a very robust targeting platform and the ability to reach out to those consumers. We just had an FI recently leverage a lot of that data, and the conversion rates that they got were amazing to drive incremental loans. The campaign specifically that they just ran was they pulled folks that had multiple credit card balances, and they did a consolidation loan for a personal loan to consolidate debt, showed them exactly what they could save, and they were blown away by the results. So being very specific and intentional that, hey, this is going to save you money, and you're pre-qualified for X. Now, you still have to qualify income-wise, but from a credit score standpoint, they meet the qualifications credit-wise to likely qualify to consolidate their debt and save money with the institution. So a lot of those things are, wow, my financial institution's not only looking out for my financial wellness, but also looking out for my financial health and looking for ways to save me money.
Is it primarily being used then as a retention tool, or as a way to kind of increase the lifetime value of each customer rather than trying to get new people in the door?
So I think for our base product, which is built into digital banking, it's retention, it's engagement, it's helping their financial health. Because think about it this way, if a consumer is improving their financial health, they're less likely to go delinquent. So actually helping your users get better financially is going to help you with less delinquencies, number one. Number two, the more products they have with your institution, right, that's going to create a stickiness factor and a long-term value, lifetime value that they have with the institution.
So how does it actually work in practice? Like, I'm sure all of your customers, right, have a mobile app where their customers log in to see their bank balance and what have you. Are you sitting
right on the homepage, in some cases right at the top,
right,
where we're not only giving them alerts as to changes in their credit file, if there's something that showed up on their credit report, like a credit monitoring alert for ID theft, an account got opened, an inquiry, something changed, we want that right in the banking app as a little icon to notify that consumer to click on it to see what it is. When they click into that experience, the other thing they're going to see after they've checked that is, oh, I see an opportunity here to save $5,000, consolidating debt or refinancing my car, whatever it might be, very relevant to that consumer and specific to them.
So you have to, I imagine there's a lot of different apps out there developed by different organizations. Obviously, you got the banking cores, the FISs and the Fiservs of the world, which I saw you actually do partner with, it looks like.
That's right.
But I imagine, do you have partnerships then with all of the developers that are creating these mobile apps? Because I imagine it's a different lift for different
so we're
companies.
integrated with all the major digital banking platforms. And so whether it be a Fiserv or an FIS, NCR, Alchemy, Q2, Lumen, I'm not going to name them all. And so we built integrations where it's just a checkbox to sign up for the service. It's a secure connection. And then that consumer, every time they log in, after saying, yes, I want to check my score for personal use, and yes, I want to be pre-qualified for offers for my institution, we don't show any other offers to those consumers. So everything is that financial institution's products or services being presented to the consumer.
Okay.
And then we integrate with the loan origination systems to reduce friction on that borrowing process. We actually saw a 80% increase in pull through. So if you're a consumer and you're going to apply for a loan, do you want to put your name, address, social, date of birth? We already have all that information. So whatever remaining items that are missing, how much you make income wise and what your rent is or mortgage payment, right? We'll we'll have them enter that into the tool, but really streamline that application process and push it right to the APIs of the loan origination system. Then we track all that in our analytics platform so that the FI can actually see, oh, these offers are resonating with my consumer, or I ran this particular campaign and it didn't convert very well. Let's go into the interest rate kind of comparison tool. And I go in there and I see that the average interest rates being offered to my consumers are lower. No wonder I'm not getting a lot of clicks on that particular offer, whereas this offer is doing well. So the product is intended to give very good benchmarking advice to the FI. Here's where you're doing well. Here's where you're losing consumers. Here's what's resonating, right? So it's really kind of walking them through how they can do their jobs better and making it easy. We have a whole marketing platform as well that has 9,000 pieces of marketing content, all customized for every platform, email, social media. We do monthly webinars and best practices series to really help our 1,300 plus financial institutions be successful, all included in the price. So we don't charge extra for that.
Okay. So I want to go back to something you said. You said it's just a checkbox to implement this and that.
Well, no. So once we do an integration with the digital banking platform, right, we have to go through that process. We go through vetting from a security standpoint. We build all the integration. But from a consumer standpoint, they'll click on the widget that's inside digital banking that has the integrated APIs and the disclosures in there. So that disclosure checkbox says, yes, I want to pull my score for personal use. And yes, I want to be pre-qualified for offers from my institution.
So then what's involved for a new financial institution comes on board and they're using one of your partners who you've already integrated with?
Yep.
What's involved in getting SavvyMoney into the app? What's sort of the tech lift and the speed that they can do that in?
Yeah, it's super easy. So one, they have to work with the sales teams at the digital banking platform. So most of our relationships are reseller relationships. So Fiserv sells it as Credit Sense. FIS might sell it as Credit Insights. Some sell it as SavvyMoney. And once they've decided to, yep, I'm good with the pricing, I've agreed to the terms, right? And an FI wants to come on board, it's really just signing an amendment to their master services agreement. And then we build the site in, probably a day in terms of like just building the actual site. The long pole in the tent is really how many offers do they want in. So all of our offer engine is completely customizable. You can turn on or off every single loan product, super easy. Changing rates, you can go right into the SavvyMoney hub and change your interest rates. But what takes a little bit of time is sending us all their disclosures, sending us all their card art, all the customization. So you can imagine that every single instance, every FI has different credit score bands, has different products, has different disclosures. So we have to work with the financial institution to upload all that. So that first lift is a little bit heavy, and then all the testing that goes along with it. So it's generally 3 weeks to launch a partner. It could be faster, but these guys have day jobs, right? And so if it were up to us, we could probably get everything up and running a lot faster than that, but we need to get all of those assets from them in order to launch the site. But very easy. And then our marketing is turnkey. The partner manager that manages the relationship walks them through, here's everything that you need to do. Here's how you're going to be successful. And oh, by the way, here's testimonials and best practices from a number of financial institutions. Here's how to leverage analytics. We've got videos that are pre-done in terms of how they can leverage that and get the most out of it. So one of the big challenges, right, for financial institutions is they've got a lot on their plate. Is SavvyMoney easy? And the overwhelming response is this couldn't have been an easier thing to implement.
So are they looking at this and saying, right, well, we really, we don't have enough uptake on personal loans or auto loans, whatever the product is, and they're getting this and saying, right, now let's unlock this and we'll see, like, for example, we know who's got credit card balances and who might be a good fit for the personal loan. And so, and with the SavvyMoney implemented, I presume, well, firstly, is it opt-in then or opt-out?
That's a good question. So most of our partners, we launched with opt-in. But then the data became so valuable and the engagement became so valuable, we offered up a solution that if you join digital banking, you automatically get opted into SavvyMoney. It's in the terms and conditions, and it's an easy opt-out. So it's super simple that once it launches, we share with the consumer exactly what they have, and they can check a box to opt out immediately. We get less than 0.25% of people opting.
I was going to say, I'm sure it's a small number because who wouldn't want this information, right?
It's free.
Even if you've got a Credit Karma account, you may as well have this other one. Makes sense. So then what are the primary use cases? Is it personal loans? Is it auto? Do you do mortgage as well? Do you
So we market mortgage, we market home equity, personal, credit card. This last year, deposits has been on fire.
Yeah.
And because the interest rate environment is such that FIs kind of pulled back a little bit on lending and leaned in on deposits. And so we've got an announcement modal that's at the top as well as in the carousel in mobile banking. And you can target specific consumers' deposit products. So if we know the trended data and we know that Peter is paying off his balances every month and he's not revolving, he's a good candidate probably for a deposit product, a CD, a money market, that kind of thing. And the credit unions in particular are very aggressive there because they wanted to build up their balance sheets in order to then lean into lending a little bit more.
Okay, interesting. So you can just tweak that, I imagine, on a daily basis, right? What the offers are. You say, right, we're going to suddenly turn off deposits. We want to turn on personal loans. Is that a pretty trivial process?
Trivial, like one day. Like call your partner manager. This is what I want to do. This is what I prioritize in the carousel. And what we're moving towards is more automated marketing. So we're building more of a regression model around the dependent variable of likely to refi your car, or likely to consolidate debt, or, we can actually look at all the data and the trended data and start to do this on behalf of the financial institution. So right now it's a rules-based engine in terms of certain rules, but what we're moving towards is more automated marketing. So there's less campaigns you have to pull. Let us go in and actually leverage the data to then optimize the platform based on what your needs are.
Interesting. So I'm curious about, from your perch, you've got a whole bunch of credit unions and banks.
And fintechs.
I'd love to kind of get your perspective on, like, fintechs, digitally native. By definition, they started life as a digital operation, whereas most of these banks and credit unions, it's been digital after brick and mortar. How are you finding, I'm curious about, can banks and credit unions compete with fintechs when it comes to customer acquisition?
And 80% of consumers that are engaging with our application are doing it through mobile, signing up through mobile, signing up through loans through mobile, checking their score through mobile. So our mobile adoption has really spiked. So we design for mobile now as being the primary entry point in the product. So I think, having a product like this that's highly engaging, that works, that drives real value to the consumer, has those banks and credit unions competing with fintechs for sure. And on top of that, the data, visibility of the data as to what's working and what's not working is super valuable to provide guidance to that financial institution on where they're winning or where do they need to get better. Because the aggregate data, you can actually go in and see in aggregate, not at the individual consumer level, where are my consumers borrowing for every single loan product in the portfolio. You have visibility to it. So you could see, oh, shoot, Cap One, Ally Financial, and Santander, not to call out those names specifically, but in this particular credit band, they're picking up market share. What is it that they're doing? How are they positioning their products to attract my consumers? Is it that my rates aren't competitive? Is it that my product's not competitive? And so giving that insight so that then the institution can course correct accordingly in order to attract those consumers to borrow from them.
So I'm thinking about the Credit Karma model, right? Where Credit Karma earns most of their revenue by referring to banks and fintechs. Do any banks want to do that? Like, do they say, I don't really want to put personal loans on my balance sheet, or I don't want to, whatever the category is, but I'd love to earn money from referring people to someone else who's doing that?
We're exploring that.
Yeah.
And so more to come there. I don't want to
Okay.
talk too much
Okay.
about the
Right.
future.
Well,
We believe that there's a possibility for institutions in a category that they don't want to carry on their balance sheet for other lenders that have white label solutions. In most cases, these lenders want to keep the relationship. So they don't necessarily want to just farm out their consumers, because then once they go to another institution that's lending in that category, then they may kind of get better and then they've lost that consumer. So I think there's an opportunity to bring other lending opportunities in. So still do it within the context of their experience, but not take the credit risk.
I want to talk about the announcement you made recently about Get My Rate. Explain what that is and why it's significant.
Yeah, so most pre-qual products, when you go to get pre-qualified for a loan offer, you're one and done. So a primary example, let's say you're Auto Navigator and you go into Auto Navigator for Cap 1 and you're an A consumer and you see the rate and like, well, that's not really what I want. It's close, but it's off by 1%. So in our product, we're saying, hey, don't lose that consumer. What is it exactly that you want? Well, if you're in the highest credit band, you may be just waiting for rates to drop. And so set the rate that you want and actually be alerted when that rate comes into play. Or maybe the institution offers, if you do direct deposit or something like that, we can get you very close to that rate. Here's what we can get you. Let's say you're a next step down in terms of your credit score and you're a 680 and you need to be a 700, you're 20 points away or you're close, right? These are the things you need to work on in order to get your score up, and we'll alert you when that rate comes available. And then the last one is a number of Gen Y and Gen Z, in particular, our credit unions have seen that, hey, if we turn them down, they don't come back, right? So giving them a path to approval and saying, it's not a no, it's a not now. And these are the things we'd like you to work on. And we're going to give you this free service in order to work on your credit. And we're going to monitor you along the way and keep track of your progress. And when you reach it, we're going to have confetti come down and we're going to say, now you're pre-qualified for this product. Again, subject to income qualifications, but at least from a credit standpoint, you're looking like you're going to meet our criteria to pre-qualify for this offer. So for turn downs, it's really, I think, a better experience to say you're not one and done. Like, because are you going to keep logging into the tool every day to see if you're pre-qualified? No, you're going to go in maybe once, maybe twice, and you're going to be like, I'll wait, or I'll shop around and go someplace else. Whereas if you can be very intentional about, here's where you are, you're close, like, let's work with you. Maybe it's a credit builder product. Maybe it's talk to one of our financial counselors. So a number of our FIs have financial counselors. We'll link them right to a financial counselor to work with that consumer. Maybe they're going to help them with budgeting. Maybe they're going to help them with getting a side hustle, and we'll make recommendations. And we put that into our content as well, that, hey, drive for Uber. You can make a little extra money, get your debt ratio in line, pay down some of your debt, and you'll get to where you need to be in order to qualify.
Right. Interesting. It's sort of almost gamifying it in a way. And, it makes sense because oftentimes they're logging in. You don't know what they're thinking. You don't know what they want. But now they can say, I want a 10% loan. That's what I want. And then you can build around it.
Honestly, it's hey, I'm a 600 and I want to be an 800. Well, you need to get to 650 first. Like, let's get you to 650 first. I want to run a marathon, but you better start with a mile.
Right. Exactly. Okay. I want to touch on AI and generative AI, because I was thinking about it particularly when you were talking about this automated marketing side. Is that something that you're applying AI to, or how are you thinking about the power of generative AI for your product?
Yeah. So we're in the early stages of that. We're thinking about it in a couple different ways. One, why did my score change? Why did it go up or why did it go down? And so really kind of looking at the answers that generative AI creates as it relates to that. And over time, so taking a look at the last 6 months and really kind of putting together a story to tell them why and what what are the top 3 things they need to work on. So we expect to have that in beta in the fourth quarter and full release first of the year. But it's also we really have to stress test that and see what those answers are and make sure that it's informing our customer service group on that we're giving the right advice. We want to make sure and give the right advice to the consumer. So measure twice, cut once,
Right, for
so
sure.
to speak, and make sure we get that right. But the early indications on the data is super powerful for the consumer. We collect a lot of our SavvyMoney Checkup product collects spending information and debt information, as well as what they're spending on their expenses, and really giving them benchmarks per category that, hey, maybe you shouldn't have $1,000 car payment, right? Like for your income, you should maybe have a little bit less. At least giving them that as like, in your income category, you should be here and here. So that can give them some information as to where they need to maybe make some adjustments in their lifestyle in terms of their spending to get their financial situation on track.
Yeah, that could be really powerful, I could see. Okay, so last question then. What's your vision for the future of SavvyMoney? Where are you taking this?
Yeah, so that's a good question, right? Like I have a lot of items on the product roadmap. And so we've got multiple constituents. We've got the digital banking platform, we've got the financial institution, we've got fintechs, and we've got the consumer. From a consumer standpoint, how do we make their lives easier and provide very actionable advice as to what they should do? And I think AI is going to play a big role as we fine tune that in giving consumers. They want to know, just what do I need to do? I want to get from here to here. What do I need to do in order to do that, right? So we want to be the best financial service in the market, providing that advice. From a financial institution standpoint, they've got a lot of priorities. How do we make their job as easy as possible to be successful in terms of gaining market share, building a deeper relationship, building retention with their consumers? So we continue to lean in there and get better and better in terms of the services that we provide our FIs. And then for our platform providers, we need to feel like we're part of their ecosystem. So whether it be data that they can do better targeting in other areas of their experience, better integrations, driving optimal conversion and a seamless user experience, that's kind of the goal. Obviously, I'd like to amass as many financial institution partners as possible. And we're going to do that by driving real value. We've got 99% retention of clients. And so that's a testament to, we provide white glove service. We provide really usable, easy tools in order to drive value out of the platform. We need to continue to lean in there and get better at it. We hear from our partners. We do a partner advisory board. They give us great, ideas as to, boy, we'd like you to do more in home equity or do more on the deposit side or help us with customer acquisition. And so we're constantly getting the feedback. We're sizing that market opportunity, and we're adding more and more products to reduce friction on that process.
Okay, well, we'll have to leave it there, JB. Really interesting chatting with you. And you've got a fascinating company providing, obviously, real value for American consumers and for banks and financial institutions. So thanks for coming on the show today.
Thank you so much.
Well, I hope you enjoyed the show. Thank you so much for listening. Please go ahead and give the show a review on the podcast platform of your choice and go tell your friends and colleagues about it. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye.